Now let's talk about 3 examples of small investments yielding great returns. Imagine back in the early days of a company like Shopify, and its early stage you invested just $2,000. If you held on to that investment for several years, as the company's share price skyrocketed, that modest $2,000 could have multiplied significantly, easily turning into $2,000 or more over time. That's a 10 times return on a relatively small initial stage. Look at CRISPR Therapeutics. When it was still in the early stages of gene editing research, suppose you invested $1,500 before the company's successful clinical trials attracted broad investor attention. As the biotech firm demonstrated promising results and its treatments edged closer to regulatory approval, the market began to recognize its transformative potential. That initial $1,500 could have grown to $9,000 or more, proving that a carefully chosen small investment in a cutting edge sector can yield remarkable returns. Consider Nvidia a few years ago, before the full breadth of its AI and data center opportunities came widely appreciated. Imagine you invested $3,000 back when most investors still saw Nvidia primarily as a graphics chip market for gaming. As industries discovered that Nvidia's GPUs were integral to artificial intelligence, machine learning, and cloud computing, the company's growth trajectory accelerated. Over time, this expansion was reflected in its stock price, consistently outpacing the S&P 500. That $3,000 investment could have easily multiplied tenfold or even more, showing how a well-timed smaller stake in a high-potential player can substantially outperform the broader market. These examples aren't about guessing winners blindly. They're about doing homework and selecting opportunities with the growth potential that the broader market hasn't fully recognized yet.